Good morning from our global headquarters in New York. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Fading enthusiasm, global stocks snap a 7-day winning streak as markets await Chair Powell. A deal in sight. Oil drops as the president says that U.S. and Iran are inching closer to a nuclear deal. And a read on the state of the American consumer. U.S. retail sales are on deck with earnings from Walmart also coming later today. Now, it is a stock market rally that seems to have run out of steam. We barely moved into the green with the close yesterday, really led by tech. Today, it is declines. It is waning enthusiasm. S&P 500 down more than 0.5%. NASDAQ 100 leads the losses, down 0.8%. Perhaps a more interesting move, though, has been the bond market. The sell-off continued yesterday. That eases this morning, but look where we are for your two-year yields. We are still above 4%. That is the highest level since February. Your 10-year yield also still above 4.5%, the highest closing level since January, and the 30-year yield getting really close to 5%. These are the worries, the levels that had worried the administration prior. And now it's really fiscal concerns and easing back of Fed cuts that seems to be moving this bond market. Let's take a look under the hood and look at the stocks that are moving in the pre-market session. With that, as always, is Bloomberg's Joe Easton. Good morning, Joe.
Morning, Danny. So there's big news in the sports retail space today with news that Dick's Sporting Goods potentially going to be doing a deal for Foot Locker in the US retail space. That bid price potentially $24. Take a look at Foot Locker stock, though, up 69% almost in the pre-market, sitting just below that price. We might even get news of that deal confirmed later today, according to the report. Then in terms of UnitedHealth, this one looking weak on report of a potential probe into Medicare fraud. We are seeing UnitedHealth stock. Bear in mind, we did just have JD Sports up, that one rising with Dick's Sporting Goods. UnitedHealth, though, lower today on news of that probe. The company says it is cooperating with the investigation. And finally, Cisco touting the AI boost to their systems in their latest earnings, seeing a jump up in the orders. Kind of just throw in the word AI in every earnings report these days. But we are seeing Cisco rising following that earnings report. That one higher in the pre-market by around 4% this morning. Danny.
Does that still work? I thought kind of the days of just saying AI and your stock going higher was over.
I think it still works today. We're seeing Cisco up a little bit. Maybe a bit of a buzzword on that one, Dan.
Joe, thank you so much. Bloomberg's Joe Easton. We'll catch up with you later in the hour. Also in this hour, in just moments, we'll be speaking with Hoxha, head of fixed income at Newton Investment Management, and later in the hour, Malek of Siebert Financial. Now, I mentioned the stocks have not only reversed their drop since April 2nd, but the S&P 500 is nearly 4% above its pre-Liberation Day levels. The bond market, though, telling a different story. 10-year yields are still nearly 40 basis points higher, while 30-year yields are hovering around 5%. Joining us now is Hoxha, head of fixed income at Newton Investment Management. Ella, great to see you this morning. What story is the bond market telling us?
Good morning. I think last month we talked about the year of the roller coasters. So I think this proves this is exactly that. So we've gone from the extreme fear of recession, which we're pricing certainly in the front end of the U.S. curve as early as maybe 3-4 weeks ago. And we're now swinging to the other dimension, which is potentially fiscal concerns. So I think bond markets are telling you that as we remove this tail to the more extreme case scenario on growth, we potentially are engaging with the other tail, which is quite concerning for bond investors, and that is obviously, can we, deal with this additional supply that's coming to markets? Can we deal with the fiscal burden broadly? So not just in the U.S., but more broadly across the world. So I think that's the story, Danny.
Well, these are the levels around 5% that last time got the attention of the Treasury Secretary, Scott Bessent. And of course, it was a president and Treasury Secretary who said, we don't pay attention to stock markets, but seem to pay attention to bond markets. It's much more orderly this time. But can this be a bond market that forces some fiscal discipline into Washington, D.C.?
Well, I mean, typically that's the case, right? And we had a bit of volatility during April that seemed to cause some concerns. But I mean, as you say, this is a lot more orderly. If you're arguing that it's pricing less cuts from the Fed and a more benign economic setup, then you can argue perhaps it's too far to extrapolate this into discipline. So I think we're quite far from that. But of course, if repricing continues significantly higher from here, particularly at the long end of the curve, or let's say 10 years and above, you can get into a situation where it starts to affect risk markets. Right. And so that might feed into the economy itself. So we could be moving from the sort of left tail extreme of growth concerns. And so the equity market leading, if you like, to the bond market leading again, which is something we've been doing for the last, say, 3 years, I think, in financial markets. So we could be switching to that dynamic. I mean, it's not a given. We're still awaiting to see what's happening to Q2 data, into Q3. So perhaps bonds do get some relief on the back of slightly slower global growth picture. But of course, you can see the bond markets now are much more nervous about the fiscal element. And so that remains in focus.
Could that convince you to buy duration, Ella, if we do see some of that weakness? Or is this a long end that you can't touch at the moment?
I'd probably say still too early to touch the long end. And that's something interesting because it's also being led by the long end in Japan. If you watch, that's been a persistent theme as well. And some bond markets are actually reacting with a higher beta to that. So there is a little bit of a global phenomenon to this. I mean, the long end of the gilt market is doing the same. So this is not just a US phenomenon. So it's really a broad bond market issue. Now, for us, duration sensitivity has come down significantly. And I would call this very different to January when we were more constructive. The reason being that in January, you had some risks to the growth element and also a lot of optimism in markets. Now we've gone the other way through, and we can actually talk a little bit more about the fiscal concerns. So I think right here, right now, it makes sense to have duration a bit closer to home and interest rate sensitivity on the lower side.
How much does a dollar that continues to weaken play into that of the less attractiveness of going into the U.S. when the dollar hasn't been playing its role, hasn't continued to strengthen, even as we've seen ruptures in other markets?
I mean, the dollar remains a little tricky. So we've been expecting a recovery, and we've had, let's say, on the DIX index, we've had about 3.5% recovery from the bottom. But the market seems to be very quick to fade that. And I think price action is probably the most telling element in financial markets. And so, yes, I think the story remains one where there is potentially capital repatriation, and this story has legs, and it's probably going to be a longer term story. So actually, we have been sellers on this strength in the dollar, and I believe we will be consistently doing so. So I think the market psychology has shifted now into sell dollar strength, and probably that's with us for some time.
I also noted down something else you wrote in your note, talking about deals between the U.S. and other nations for trade. You said that they might not come in time to save the cycle, and hence from here, data will dominate mood for the markets, given the moves that we've seen. But Ella, how do you even interpret the data at this moment? We're about to get retail sales. We're about to get PPI. The expectation is some skewing of the data because of the pull forward effect, trying to get ahead of the cost of tariffs. How are you viewing each piece of data that comes in and applying it to where you're investing?
I mean, we always like to think in skew on probabilities because we don't have a better read than some of those, smart investors out there. So look, I mean, what are the odds that data comes in stronger than expected relative to where we were in March? Potentially, you can have better data relative to where we are, where we went in April. Potentially better data. Is the broad economic growth picture significantly better off? Probably not. So I think you have to kind of sit somewhere in the middle. Very difficult to ascertain. Jobs numbers remain very important. So that's probably what we're watching. There were signs that the U.S. economy was slowing into this anyway. But, the market could see through that, right? So that's why you have to be a little bit more flexible, I think, with your mindset now. The market could see through that and say, okay, this is no longer the key story for financial markets, and therefore potentially that's why bond markets are trading with a steepener bias.
Ella, we're going to have to leave it there. Wonderful to see you this morning, and always great to get your take. Ella Hoxha of Newton Investment Management. Let's now get you some other stories that are trending on the terminal this morning. President Trump said that he's asked Apple CEO Tim Cook to stop building plants in India. As a result of that discussion, the president said that Apple would be upping its production in the United States. Apple had been planning to import most of its iPhones sold in the U.S. from India. Elsewhere, billionaire Steve Cohen says that the chance of a U.S. recession now stands at about 45%, and that his expectation is for U.S. growth to slow to 1.5% next year. The founder of Point72 noted the unusual nature of the stock market's tumble and recovery in April. In April, Cohen's hedge fund gained 2.3%. Russian President Vladimir Putin chose to spurn attending a meeting in Turkey with Ukraine's President Volodymyr Zelensky and top U.S. and European diplomats. Instead, Putin is sending a delegation of low-level representatives. The diplomatic snub dibs the possibility of any major breakthrough in the proposed peace talks between Moscow and Kyiv. Coming up, all tariffs off the table. President Trump says that India offered to remove levies on all U.S. goods. We'll discuss that and the president's Middle East trip coming up next on your Bloomberg Brief.
It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff.
The president speaking earlier with business leaders in Qatar. He didn't offer further details of New Delhi's apparent offer. Bloomberg's Jomana Bercecci has been on the ground and joins us now from Abu Dhabi. Jomana, it has been headline after headline coming from the President Trump. It has been relentless. What's the latest with what the president has said about India?
Yeah, so that was another major headline that dropped, a surprising one, I would say, to come through from his Doha press conference. But the president seemed to imply that India are getting closer to removing all tariffs on U.S. goods. This is a significant development because earlier in the week, the sounds coming through from the Indian Commerce Ministry suggested that they were looking to go for a more hardline approach. They had suggested increasing the tariffs on steel and aluminium. The Commerce Minister is making his way to the U.S. later this week for further trade discussions. And it seems as though that strategy of perhaps going slightly more hardball with the U.S. seems to have paid off because the Trump comments imply that they are getting closer to some form of a trade deal, which would entail lower tariffs on U.S. goods. Currently, the trade deficit with India sits at around $45 billion. In the past, when the Trump administration had floated the idea of reciprocal tariffs, the one that they were looking to apply in India was 26%. Of course, there is a 90-day pause now. But this just tallies on to the momentum that we got over the weekend, positive momentum coming out of those Geneva talks between U.S. and China, and just another sign that the U.S. administration is looking to ink some deals with some of the major trading partners around the world. And I guess the market is construing this as a positive development from a trade perspective.
Well, it seems to go just beyond trade, Jomana. We have specific company deals, Boeing being one of them, and Trump announcing a record order coming from Qatar Air. It's remarkable to see not just trade deals, again, but to target specific companies, specific homegrown American companies.
Yeah, so the thing is, there are lots of headline numbers coming out. The other headline that came out yesterday from Qatar was that the two sides, Qatar and the U.S., had agreed to a $1.2 trillion, quote, economic cooperation. That is not the same as actual investments or deals, but it is a sort of promise to work together in the future. As for deals that have been signed, those amount to around $254 billion. Those are actual deals. The Boeing one is significant. Qatar Airways, we spoke to the CEO a couple of weeks ago, and he actually hinted to us that a big order was coming. We didn't think it was going to be an order of this magnitude, the largest value order ever that Boeing has received, $96 billion in value. They're looking to purchase up to 210, 160 firm order with the option to buy another 50. But again, is also an endorsement of Boeing. This is a plane maker that has come under a lot of scrutiny, a lot of pressure over the last year, and is an endorsement of sorts. And also a particular note that the Boeing CEO himself was traveling to the region with President Trump, and part and parcel of, I guess, some of the deals that this administration was looking to ink. On the Boeing side of things, we also had a $4.6 billion order come through from Saudi Saudi Arabia. And beyond that, we're waiting now for President Trump to address some of the U.S. military troops at the Udeid Air Base in Qatar. That's quite significant as well, because this is the biggest air base that the U.S. have in the Gulf region. And they are also inking a defense deal with Qatar of as much as $38 billion in value as well. So the deals are coming through, but of course the headlines that Trump has been talking about are much higher than what actually has been agreed to on the ground between some of these companies and some of the GCC companies that we've been talking about.
Jomana, just quickly, what are we expecting next on the president's agenda on his trip?
Yes. Yeah, so I'm obviously in Abu Dhabi now. President Trump is going to make a tour of that airbase, and then he's going to hop on a flight and come over here to Abu Dhabi. We'll be here for a day and a half, and it is expected that he will be meeting, of course, with the President, Mohammed bin Zayed. So that will be a notable trip, too. The last time a U.S. president was in the UAE was 17 years ago. So another major milestone for Gulf countries. And in the UAE, I would say the focus is going to be a little bit more on artificial intelligence. We spoke about this in Saudi Arabia, and the fact that the U.S. are now allowing for some of these high-end chips to be used with these AI data centers in the Middle East. We expect something of that sort of scope to be announced in the UAE in the coming days as well.
Jomana, thank you so much for joining us. Looking forward to your coverage there out of Abu Dhabi. That is Jomana Bersetchi. And his latest press conference in Doha, President Trump also gave an update on negotiations with Iran.
Iran has sort of agreed to the terms. They're not going to make, I call it in a friendly way, nuclear dust. We're not going to be making any nuclear dust in Iran. And we've been strong. I want them to succeed. I want them to end up being a great country. So we'll see what happens. But we're in very serious negotiations with Iran.
And oil falling for a second day after those headlines over fear of what could happen to supply. NYMEX crude now down more than 4%. Brent crude almost down 4%. Joining us now is Bloomberg's Julian Lee. Julian, clearly this is something the market is concerned about. If there is a deal with Iran, what could the supply picture look like?
Well, we really don't know because Iran has been constrained by sanctions for such a long time that we really have very little idea of what their production capacity truly is and what, therefore, their export capacity is. But if we look at what they've done in the past, we could easily see another 1 million barrels a day of Iranian oil on the market, coming at a time when other members of the OPEC Plus group have also upped their production targets by more than 800,000 barrels a day for May and June, perhaps more to come for July. And on top of that, of course, we've got new projects starting up in Guyana, in Brazil, off the coast of the US, all adding to supply this year, and a year where demand growth looks fairly anemic.
Could this be the thing, though, that forces more discipline among OPEC Plus members? We've heard that Saudi might look at putting more barrels to kind of get that discipline back into the rest of the members. If you have Iran coming back online and oil prices falling as much as they are now, Julian, could this be the thing that allows OPEC Plus members to fall into line?
I really don't see it. I mean, if you look at where the cheating, if you like, comes from, it's really from Kazakhstan and Iraq, and perhaps some estimates would say the United Arab Emirates as well. But if you look at Kazakhstan and Iraq, Kazakhstan, their oil industry is dominated by 3 huge projects, all of which are run by major Western oil companies. So really the production decisions are in the hands of boardrooms of those companies. Yes, the government can perhaps lean on them. It can restrict access to pipelines, but they have to tread a very careful line because they need the investment from these companies, and they need their investments going forward. They also need the oil revenues. So it's difficult for them. And really, when it comes down to it, the numbers that we're talking about are not huge. I mean, we're talking about overproduction of, a couple of 100,000 barrels a day, perhaps. and you put that into a global context, and it's really not a huge number. And I'm not entirely convinced that what OPEC Plus is doing and what Saudi Arabia is doing is really driven by a need to punish Kazakhstan.
All right, Julian, thank you so much for that update. That is Bloomberg's Julian Lee, and you are watching Bloomberg. Take a look at what's on the front pages this morning. The Wall Street Journal leading with the bombshell that UnitedHealth Group is under a criminal investigation by the Justice Department. The DOJ probe has to do with possible Medicare fraud. UnitedHealth, though, said that the DOJ had not notified them about the reported investigation and that they stand by their Medicare Advantage program. The FT, meanwhile, is leading with the U.S. preparing to announce one of the biggest cuts in banks' capital requirements in a decade. FT sources say that the regulators are looking at the supplementary leverage ratio. Finally, the Washington Post leading with Democrats rattled again by new claims that President Biden's aides had hid his fragility. A growing number of Dems are publicly second-guessing their party's handling of the disastrous election last year. Coming up, ignore inflation at your own peril. That's the warning from Malek of Siebert. We're going to take a closer look into the numbers and his view. That's coming up next on Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Fading enthusiasm, global stocks snap a 7-day winning streak as markets await Chair Powell. A deal in sight, oil drops as President Trump says the U.S. and Iran are inching closer to a nuclear deal. And the state of the American consumer. U.S. retail sales on deck alongside earnings from Walmart. And it is an equity rally that has run out of steam. We barely eked out gains yesterday. Really poor breath. Today it turns to declines, down 0.7 for the Nasdaq 100, leading the way down 0.5% for your S&P. Risk assets abound, doing poorly. You can see oil at the bottom of your screen down 4% over hopes of an Iran nuclear deal. Meanwhile, maybe it's the bond market that's been more interesting. Some real pain yesterday turns into an easing of yields this morning. We're still, though, above 4% on your 2-year yield and 5.5% for your 10-year yield. Those are the highest levels since February and January, respectively, on a closing basis. And we get closer to that 5%. Is it fiscal concerns that this market has now flipped to? Let's get a look underneath the hood. Back with some stocks to watch. Here is Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny. So we got a big move in Foot Locker today. The stock rising currently around 69% as we get news of a potential bid coming in from Dick's Sporting Goods. I keep thinking about those stripy black and white shirts over at Foot Locker. That company potentially getting a takeover bid at around $24. We're currently trading just below 22, so potentially you might see that one moving even higher. Then we've got Boeing on the radar once again after those comments from Trump earlier and yesterday's news of potentially around 200 jets being bought by the Qataris from Boeing. A massive deal that Trump reckons could be worth around $96 billion, but potentially there might be some discounting on that. But nonetheless, Boeing up massively. Well, maybe not too massively, up around 2%. Anyway, a massive order nonetheless. Then we've got Cisco Systems beating on expectations in terms of the AI demand. We're up around 4% for that one today. Continued strength, not just in AI, but also in cloud as well. Cisco on the radar today, but really the big mover is over for Foot Locker. That one really catching my eye today. Keep an eye on all of those ahead of the open in New York.
Joe, I demand you show up next time in one of those Foot Locker kits that are striped. I demand it.
I'm going to get on Amazon and buy one.
Perfect,
I'm
Joe.
going to go and buy one today, 100%.
Thank you so much. As always, excellent work this morning. That is Bloomberg's Joe Easton. Now we're going to get some more data. U.S. PPI, that comes in less than 3 hours. And that followed from earlier this week, cooler than expected CPI. Malek of Siebert, though, stays cautious on the latest inflation print, writing, quote, inflation is like a shark. Ignore it at your own peril. A dorsal fin surfaced in CPI. What is your next move? He joins us now. And Mark, I should note you put in your notes that you can quote me on that, so I had to. And it really makes me not want to go to the beach, I'll have to say, reading your shark notes. But so what now? Why are you concerned? This is a market that took relief from the CPI print, but you didn't.
Yeah, well, if you break down the number and you look at where any of that, we looked at the headline. Most people look at the headline number, but if you break it down and you look at goods inflation, you see that goods actually have been, they were deflating and now they're coming back into inflating, right? And so we've seen that trend slowly move up, but it now bounced above the water, similar to that dorsal fin that I referred to. And when you're talking about tariffs causing inflation, it would be in that area. So we've been hyper-focused on services inflation for good reason for the past many months, but now we have to start looking more closely at goods inflation, and we do start to see that happening.
So is it your assumption then that it is just inflation that's going to start to arrive, or are you looking at a more stagflationary environment?
Stagflation has certainly been something we've been a little bit concerned about. Obviously, we've had some recent developments in these negotiations. However, if you look at the numbers, right, it seems like the president's still settling in somewhere around the 10% level for tariffs. And if you look across the board, I mean, it's still going to be there's still going to be impairments to U.S. companies. So we have to start to get realistic on that and see which ones can navigate that situation best.
It's interesting because if you look at some of the most recent surveys, Bank of America had their investor survey yesterday. And when they asked people what sort of landing do you expect, the no landing scenario where you still have inflation, the economy chugs along, barely anyone thought that that would be the case. So if we are going to have something that looks like persistent inflation, how offsides are markets for it now?
I think markets are trying to feel their way through, right? I think we're going to see, it's definitely going to be a challenging summer. We're going to start to see some real prints over the summer that are going to really reflect policy. We haven't seen any of that yet. I think we've had a couple of positive days. I think there is certainly in the equity markets, I mean, there's a little bit of relief and exuberance. But if you look at the bond markets, certainly bond markets are a little bit more skeptical. And I think, again, while we like the rallies, we're still positive long term. Third quarter, fourth quarter going to be tough, but fourth quarter, first quarter next year, hopefully we can get past some of this stuff.
That disconnect between stocks and bonds has been really interesting because in Trump 1.0, when he was focusing on tax cuts, it was giving juice to the equity market while bonds sold off. And eventually the equity market rally stopped in late 2018 when bonds got around 3.25%. That seemed to spook things. We're at 4.5% right now for 10-year yields. How much more tolerance does an equity market have to rally as bond yields keep climbing higher?
Well, it's a very different situation than Trump 1.0. Right now we have a deficit that's swelling, and it's swelling because also it's not being helped by higher yields, right? The debt service is higher now, so it's much more challenging, right? And the whole nature of how we float bonds in the U.S. is naturally going to push yields higher, unfortunately. And I think from the equities perspective, I think equities have become a little bit more numb and accepting of these high rates. But 450 on the 10-year, if it keeps going from here, you could see some impact on the equity markets if you still see it continue to bubble up the way it has been in the last couple of days.
Well, back in April, and let's be honest, that feels like it was years ago, but back in April, there was this real concern that foreigners wouldn't be buying American assets, that they'd be unwilling to fund some of the American deficit. You still hear those concerns that maybe the volatility has done enough to frighten foreigners. Clearly someone's still buying this equity market, but is that a real concern, that debt concerns get more acute if you have people overseas not willing to buy American debt?
I think that, of course, the movements in the bonds and yields themselves, I think that reflects current sort of sentiment. But I believe long term, there's still no better investment for foreign investors because where are they going to put their money? I mean, what's a better option for sovereign debt? So I think long term, it's not necessarily concern. I think it's a little bit of a tempest in a teapot, but it's something we have to watch in the short term, right? So if you see yields spiking, if dollars moving offshore, that can impact equity markets. But I'm fortunate in that I can look a couple of quarters ahead, and so from my perspective, I think we're going to look back on this as a period of, okay, we saw what happened, but this long term, I don't think it's going to affect the relationship that we have with foreign investors.
So fair characteristic that you're looking over the boat, looking to see if there are any sharks, but in the meantime, you're still buying risk. Is that fair? Or have you pulled back a little bit?
No. I think equity markets. I think all equities are created differently, but there are plenty of great opportunities out there. I mean, the technology sector still offers fantastic growth. We can see that there's still plenty of room. Nobody is canceling orders for NVIDIA. Obviously it takes a little bit more conviction. You really have to be tough here, but if you look at the numbers support it. However, you see big moves like we've had over the past several days, and so you want to be a little bit careful and give the markets a chance to sort of calm down. But if you look a couple of quarters out from here, I think, again, we're going to be higher. I think if you look at sentiment, I saw a couple of reports out on Bloomberg this morning, where like peak low sentiment, but that typically precedes movements upwards. So if you look at the numbers, if we just look at history, we can expect rallies to go from here at this point.
Mark, I think that's the perfect note to end it on. Thank you so much for joining this morning. Really wonderful to see you. That is Mark Malek of Siebert Financial. All right, a quick check on Alibaba at the moment, because they did indeed report their earnings. If we can just look at that real quickly. It's something that we had been waiting for. Again, earnings from Alibaba coming out moments ago. I will get you that in just a moment. I also want to note that we have the President Trump is about to leave there we go, Alibaba having dropped after their earnings report. Okay, quickly, officials from the U.S. and China have met on trade talks in South Korea. Just some trending stories for you this morning. Days after the two nations agreed to a 90-day pause on some tariffs, Jamieson Greer sat down with his Chinese counterpart in the island of Jeju, according to a South Korean official. No further details have yet been reported. Now, coming up on the program, President Trump says that India has offered to drop all tariffs on U.S. goods. He is speaking now in Doha. The president will be going shortly to Abu Dhabi. But for now, President Trump addressing U.S. troops on his Middle East tour. We'll leave you with live pictures of that.
As your Commander-in-Chief, I'm here to say that America's military will soon be bigger, better, stronger, and more powerful than ever before. We just did a budget. The budget was the highest by far, over $1 trillion. It's a lot. It's a lot of stuff. And hopefully it's peace through strength. Hopefully no happy news.
It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff.
Now, India was one of the first countries to begin trade negotiations with the U.S., but the Indian government didn't immediately respond to a request for comment. Joining us now is Bloomberg's Jomana Bersetchi, who has been following the president on the ground. Currently, she is in Abu Dhabi. Jomana, a lot of news coming out of this. How much can we read into what the president has said about India during his trip?
Yeah. Yeah, so the headlines are coming thick and fast, as you say. On this particular point, President Trump was in Doha and he was giving a press conference, and he sort of made this announcement about India, suggesting that they were coming close to a trade deal in which India would lower the tariffs on U.S. goods to almost nothing, i.e. To 0%. And this is a turnaround in sentiment, I should say, versus the beginning of the week, because earlier in the week, there was a bit of controversy or sensitivity between India and the U.S. because the U.S. side, the Trump administration, seemed to imply that the breakthrough, the truce between India and Pakistan was negotiated as a quid pro quo on securing a trade deal. And they rejected those assertions. But what we do know is that the commerce minister is actually heading to the U.S. later this week to continue those discussions. And the U.S., of course, riding on good momentum after the Geneva mechanism that was agreed to with China over the course of last weekend. So very intent on securing more trade deals with their major trading partners. And on India specifically, they've got a $45 billion trade deficit, something that, of course, has been on President Trump's mind. The fact that he said this, though, does imply that there has been progress in that respect, and perhaps another constructive development for markets.
We also have the president at the moment speaking at an air base in Qatar, saying that the U.S. military will be bigger, better, stronger, also saying that Pete Hegseth is a great guy who was just speaking before the president. Jomana, what is next on the president's agenda as he continues his tour in the Middle East?
Yeah, let's just take a moment to acknowledge the pictures that we're looking at right now. President Trump has been on this whirlwind tour around the region. Obviously, a lot of proclamations, declarations coming out of Saudi Arabia. He's made on his way onto Doha yesterday, where he signaled that $1.2 trillion of economic cooperation had been agreed to. Economic cooperation, not the same as deals, but a pledge to create that much value for the U.S. economy. In terms of deals, they've inked more than $250 billion worth with Qatar. The major headline being that Qatar Airways deal of around $96 billion. The Qatar Airways order is the largest order Boeing have ever received, with an order of up to 210 jets. So that was significant yesterday. But in terms of where he's standing right now, this is the largest military base in the Gulf, and really just underscores the growing role that Qatar and other allies of the U.S. in the Gulf are playing when it comes to advancing some of the Trump administration's goals in the region. Earlier on, we were talking about that press conference where he also said that he's been talking to Qatar leadership, the Emir, about advancing the Iran-U.S. nuclear discussions. And of course, we know that Qatar have been playing a diplomatic, important mediation role on the ceasefire discussions in Gaza and the release of hostages. So this is also a significant moment for the Gulf countries. This is the first time the U.S. president has been in Qatar since 2003, and then he's going to be making his way over here to Abu Dhabi, also the first time the U.S. president sets foot in Abu Dhabi since 2003 as well.
Jomana, thank you so much for your coverage this morning. Looking forward to following along. That is Bloomberg's Jomana Bersecci. Now, one stock we're keeping our eye on this morning, UnitedHealth shares are down nearly 6% in the pre-market trade. That follows a bombshell report from the Wall Street Journal that the company is under criminal investigation for Medicare fraud, something the company says that it has not been notified of. Let's go straight to Bloomberg's Joe Easton for more detail. Hey, Joe.
Hey, Danny. So as you say, it could be a rough day for that stock today. UnitedHealth down around 6%. In the pre-market, following that report in the Wall Street Journal. As you said there, UnitedHealth kind of saying that they hadn't actually heard about that probe and are standing by their Medicare Advantage program, which does seem to be the focus of that report. But this coming just a few weeks after they scrapped their financial guidance. We've also seen the change in CEO as well. So potentially it's looking like an unstable period for the company. We'll have to wait to see if we get confirmation of that report from the WSJ and any further commentary from UnitedHealth. But clearly some investors getting spooked by that, already nursing losses of around 30% on a 2-month basis for those shares. So potentially, again, going to be a rough day for UnitedHealth this morning.
Yeah, they're down 38.8% so far this year. Again, very challenging, getting caught off guard by some of the higher medical costs too and scrapping their guidance. Joe, thank you so much for joining us this morning. That is Bloomberg's Joe Easton. Now, along with UnitedHealth, another potential mover today, Walmart. They are going to be reporting their first quarter earnings this morning. Shares higher by about 0.5% heading into it. Let's get more from Bloomberg's Charlie Wells. Charlie, what are we expecting from the giant, from the retail giant?
Yeah, Danny, we're spending so much attention on the stock because this is the world's largest retailer, and they are exposed on the trade front. We got a little bit of a sneak peek from the investor day that Walmart had last month when their CFO talked about the import mix that this company had. About a third of the products that they sell in the United States come from abroad. The major sources of those products are China and Mexico. And let's not forget that in this quarter that Walmart will be reporting on, those 145% tariffs, at least for part of that quarter, were in effect. Of course, they've been reduced on China to 30%, but still we'll be parsing how this company has been navigating this trade difficulty when they do have that import factor, but also when consumers are so razor focused on prices at a period of instability. That is something else that we will be watching.
Well, it's not just Walmart. It is retail sales as a whole, Charlie. How much of this can act as a bellwether? Is Walmart in a special place when it comes to the U.S. consumer?
You know, Danny, Walmart is in something of a special place because they do have that emphasis on price. But what we have been seeing and what management at Walmart has been talking about when they've reported in previous quarters is this higher income consumer tending to look more to Walmart as they feel a little bit more pressed. So that is one of these issues that we'll be looking at. Do people who you wouldn't necessarily expect to go into Walmart, are they going there? And what does that say about the consumer? Because we're at a time when there are a lot of questions about consumer sentiment, where consumers have been talking about not feeling great, but that hasn't necessarily been trending into the hard data. So this could be a helpful point.
All right, Charlie, thank you very much. That is Charlie Wells. And again, we're going to hear from Walmart before the bell. We are also going to be getting some retail sales data. That will also come this morning. A lot of questions to how the consumer is holding up amid this uncertainty and as to whether or not you will actually see the impact of tariffs yet. We hadn't quite seen it in CPI, but of course, we were just speaking with Malek of Siebert Financial, who said that he is concerned about the goods inflation starting to pick up. Will Walmart also be able to price some of that pricing, some of the higher tariffs to the consumer? Now, I want to take you to live pictures again of the U.S. President, President Trump. He is currently speaking at an airbase just outside of Doha, Qatar. Later, he's going to be heading to Abu Dhabi. He's been speaking there, saying that the U.S. military will be bigger, better, and stronger. He said that Hegseth is a great guy. He's been praising the ambassador and a lot of folks over there. Also said that the Qatari emir has been a longtime friend of his and that our friendship with Qatar has never been stronger. As a reminder, some of the headlines we've gotten out of his trip to Qatar, a huge blockbuster deal for Qatar Airways to buy Boeing. The president also talking about India, saying that it would lift all tariffs. We'll leave you with these images of the president.
America's military will answer our enemies without even thinking about it. We have overwhelming strength and devastating force. And we had people that didn't like to talk about that, you know? They didn't want to talk about.
You're watching Bloomberg Brief on this Thursday morning. I'm Danny Berger in New York. Let's get you set up for your trading day. We're going to get some data coming out. U.S. PPI, retail sales, jobless claims. All of those will hit at 8:30 a.m. Eastern. We'll also get remarks from Fed Chair Powell. That comes at 8:40 a.m. Before the bell, we're going to get earnings from Walmart. So a big day for the read of the American consumer and the health of them. UnitedHealth, that's one of the movers we're also watching this morning. The Wall Street Journal reporting that it's being probed for something around Medicare fraud. We should note that UnitedHealth has said that they have not heard from the DOJ and that they stand by their Medicare Advantage program. Cisco, they also had earnings after the bell. Gaining, they boosted their full-year revenue guidance. AI really buoying demand. You can see Cisco shares up 4%, but to the downside in a big way. Again, I mentioned this moments ago. We got Alibaba earnings. Fourth quarter revenue missed estimates as the consumer downturn persists in China. Those shares down nearly 5% for the ADRs in the U.S. Now, the bond market's something that you want to keep your eye on, because even if stocks have rejoiced, yes, they're kind of taking a pause this morning, even if stocks have rejoiced and made up plus more their lost ground for April 2nd, this bond market hasn't. 10-year yields are almost 40 basis points higher since April 2nd. At the moment, you can see we are lower across the curve. That was not the case yesterday. We were moving higher, and we're still around the levels that we got to. Still above 4% for your 2-year yield. Still above 4.5% for your 10-year yield. All of that, maybe fiscal concerns coming back in as we reduce the bets of the Fed cuts. We're under two cuts priced into this market for the year. Your 30-year yield, that's also getting closer to 5%. Levels that spooked the administration, but will it at some point spook this equity market? Now, one risk assets that is not doing well today. I also want to give you a check on oil this morning, falling quite a bit of an amount, 4% for NYMEX crude, 3.8% for Brent crude. That's after President Trump said that they would be getting closer to something that looked like an agreement with the deal with Iran. We also heard from the IEA saying that global demand is set to slump, all of that leading to lower oil prices. Well, the U.S. president is still in Qatar, speaking at an air base this morning, praising the U.S. military. He goes to Abu Dhabi next. That is it for your Bloomberg Brief. Surveillance will have the latest on the president's tour in the Middle East. That's coming up next.
They were unable to fund Hamas or anything else. Wouldn't have happened. We wouldn't have had the disaster of Afghanistan, the leaving. We were getting out, but we're getting out with dignity and strength. We're going to keep Bagram Air Base. We weren't going to give that up because it's 1 hour.